Hey, what's up everybody? Doing my typical weekend video where I like to dive into a little bit more details, talk about the charts, but the psychology and how to prepare us for the week to come. Crazy January. What do we got? One more trading day left in January. Worst January in stock market history? Um, I think still, I'm not quite sure off of the bounce on Friday and then what happens on Monday. We'll see. But pretty ugly month, right? Did the year began thinking about, one good trade a month and that's all you got to really look for? There was one. It was the oversold bounce that came into last Monday, although it was a terrible trading month for anybody that was on the bull side. So if you're on the bull side, it was a very difficult month. And that's it, that you're going to have times in your trading that you're not going to have a good run. You're going to be, a little bit frustrated. You're going to take more losses than what you want. Then you're going to spiral out of the character that you want to be, the idea, the trader, the vision that you have for yourself. You're going to spiral out of it. You need to do that in order to learn from that experience to ensure that you will be better the next time you see a similar situation arise, whether it's the same pattern in the market that you're trading, whether it's the same pattern in your behavior, the characteristics that you say, hey, I'm going to be disciplined, I'm going to be patient, I'm going to wait for A+ setups, and then all of a sudden you start losing a little bit of money and then you fall out of character and you start doing things that you typically wouldn't do. You have to do that. That's okay. I know it sucks in the moment because you're losing money, you're fighting trends, you're over trading, you're not who you want to be. It sucks in the moment, but when you go through it, you live it, you understand it, the next time it happens, you'll recognize, oh shit, I'm doing it again. Yes, but at least you're recognizing that you're doing it again and you remember how it worked out for you last time. So you're going to do it, you're going to do it. It's going to mess up. You think you're better this time. You have more experience. You understand trading more. So you think you can manage your way out of it, but then you forget you're still trying to fight trends. You're still over trading. You're still doing the same things that you did before. Even though you are better now, you still got the same results. And it is a demoralizing feeling. I know it. I've been there many times. And then at the end of the day, once the dust settles, the smoke clears, you sit back, you relax, you say, oh, okay, I did it again. That's the last time. I'm never going to let it happen again. And truthfully, when you do realize that, when it happens again, because it always happens again, you stop yourself short. You say, no, this is it. This is what I was doing before. I'm taking a break. I'm not going to fight this. I'm in a bad place mentally, and I'm going to move forward from there. So if you're in that boat, if you're in that camp, great job. Kudos. You recognize what wasn't working for you before. You realize you've done it again. You stopped yourself short. There will be more times where that's going to happen, but you'll keep on stopping yourself even further short. That's where I am at. I keep on stopping myself further short from recognizing, okay, I'm not quite sure what's going to happen in here. When we are not quite sure what's going to happen, I promise you this. You will not trade with conviction. And in order to make money consistently and to make big money, and that's ultimately what everybody wants to do, right? Is make big money. In order to do that, you need to trade with conviction. How do you trade with conviction? You have to understand a lot of things that are happening and then have that feeling on the inside, that sense, that conviction in what you are seeing, and really go for it. For you to have conviction, for me to have conviction, a lot of things need to line up. And all those things lining up typically don't happen at the bottom. They don't happen at the bottom. Okay? They happen after you got enough information. So the question is now, are we at the bottom? So if we're at the bottom and you want to go for it and you believe this is it, that's where your conviction is, hey, no one's going to tell you not to do it. It could be, and it could be running from here. So if you're going to trade like that and you believe this is the bottom and you have conviction, don't let anybody tell you otherwise. Don't go on Twitter and read some guy's post and this guy's idea and this guy's video and everything. Trade with that conviction. If you have it, go for it. Don't let anybody tell you otherwise. The biggest money is made when you have conviction. Now, the biggest money is lost when your conviction was completely wrong and you didn't have a security blanket and risk management system. Your risk management should never be, it should never be neglected, ignored, but especially at times like this in the market where it could get nasty faked out this week, next week. going into Feb 10. I think CPI numbers on Feb 10 likely going to be something very important at that time, dealing with this inflation. We're getting so many mixed signals now from the Fed. We got Kashkari saying, oh, maybe we're not going to raise rates. We got, Boskin or whatever his name is, saying now maybe 50 basis points in March. Like, it's going to be so hectic right now. And we're going to need to see data coming out. Once the data starts to come out, and we'll see, hey, where they're going to take us from here. So I am personally not ready to trade with conviction. So this is not my time. There will be conviction trades. There will be individual moment trades. Like last week, anticipating the bounce, that's a conviction moment, but all that is just a trade. This is not a long-term swing hold conviction play. I don't have that right now. I don't have that in anything I'm looking at. I'm looking at, is there an individual trade where you can make some money? That's it. No conviction. This is not, the biggest money I ever made was holding long conviction plays, was holding CGC for a very long period of time. That was a killing. Holding Score last year, that was a big conviction trade. We made a lot of money on Score. Holding Tesla for very long periods of time, playing weekly options of Tesla while I was running up into the into the split, into the uplisting. Apple, massive trades into the split, into just Apple being in blue sky runouts, blue sky breakouts. So at the end of the day, if you're gonna have conviction right now, you best have a very high level game plan on how you're going to protect yourself in the event you are wrong. Because everything right now is going to cloud your judgment. We use technical analysis to give us an edge, right? It's to give us an edge. So if anybody ever asks you, what's your edge in trading? Hey, I'm on Wall Street Bets. I see this guy says it's going to go up. That's my edge. Okay, you're going to lose money. You go on Twitter and you say, oh, this guy posted an LA wave count that says it's going to go up to 5,000 now. Okay, you're going to lose money. Anything that you're using that is not your own visual understanding and it's something you've time tested and seen true to what you do, if it's not that, then forget about it, right? For me, I have my conviction setups. I have the volume climax setup. I have algo breakout in 2-minute, 5-minute ADMA. I have holding the ADMA in a nice trend. Those are my conviction setups. My conviction setups is not trying to time bottoms and it's not trying to time tops, right? It's not at all. It's not me. It might be you. You might have something that works for you. Know your system, understand your system. But right now, do not fall into a trap of this person says this person says this, and the moment we break through a couple of levels right now in the market, which potentially we're going to do tomorrow, it starts to create that bias that that guy said this is what's going to happen, and then you start trading with conviction, but it's a false sense of conviction because it's relying off of somebody else's what they're saying versus what you've seen, what you know works, what you've tested. Okay, weekly RSI is here, daily RSI is here. Yeah. Okay, where's inflation? Where's the yield code? Where's the yield curve? What's going to happen with the CPI numbers that come out? What about all that new information? I don't know. I don't have the answer to those things. So I'm going to be a participant of the price action that's developing versus timing. This is it. If this was it, I would grab all my money right now and I would go load up right now. I would buy all these stocks. I would load up some ARK, AFRM, Hood, SE, Zoom, Etsy, Coin, PayPal, Roblox, Palantir, Net, Square, Lucid. I would buy all those things right now, load up, come back next year and be very rich. I don't know. I have no idea. We got to see how this inflation situation is going to play out. Do you want to look at, hey, what did the market do at this time, a couple years ago, at this point? Was it an ABC correction? Does the market only correct in threes? Does the market correct in fives? It always seems to correct in threes. We have a 3 right now. Well, we have a 3 on the daily. Is it going to be a 3 on the weekly? Is it going to be a 3 on the monthly? We don't know. We need a lot more information. So my advice to you right now is take it day by day, trade by trade. This is not the bottom of the Corona crash, where it's going to be so clearly visible and then we can run it up and the market and the Fed and everyone's behind you to support you. Right now, we don't have that. We have the Fed saying they're going to be raising rates. Market's already dropped 18%. And we haven't even raised yet. What happens when we raise? We have companies, individual companies going on and talk about the supply chain issues still lingering. Job participation, job numbers, all these things are factoring into the market. So when you just go look at, hey, this is oversold, the weekly RSI, I'm just going to buy here, hold long. It doesn't work that way. It's not that simple. If it was that simple, take off everything on your chart, just use the RSI and just trade off of RSI. It doesn't work that way. RSI could stay extended for a very long period of time. It could stay in a range for a very long period of time and continue to drop. I thought Netflix, do I have Netflix here? I thought Netflix would have been a pretty sweet deal on that daily chart when we were in here, right? In here, guess what, guys? We were trading at 24. Daily RSI 24. We hadn't seen this. I talked about it in a video. I can't remember what video that was. And here we are. We're trading at 20. Guess what? From where we are, 24 to 20 RSI level, I don't remember which candlesticks it was, 24 to 20 RSI level, the stock dropped another 33%. Can't just trade off of that, right? So is this a conviction time? Am I going to come in here this weekend video and telling you it's time to get aggressive, it's time to go for it? It could be for an hour, for 2 candles, daily candles, and then boom, and fall on us. So it's still remaining short term. Watch the price action, see what the daily charts are going to show us. I see some good signs, I see some good things, but the conviction is very low. Very low. I have a very low conviction idea right now on where the market's going to go. So I could do this. I could say, if you want a bunch of trades, I'll come out and I'll say, buy all these trades, do these things. Some of them are going to work out, some of them are going to get smoked. You know, use good risk management on the ones that are wrong. Let the ones that work mature. You know, just let them develop. Don't sell them too soon. Oh, it's so simple, right? It's so simple. Yeah, it doesn't work that way. It does not work that way. This is real trading, real money, real skin in the game, and we're not quite sure where the market is going. It does not feel comfortable yet. There is some opportunity for short-term trades that are clearly visible, and I'm going to talk about them, and there's going to be opportunity to hit them. They might last 30 minutes. They might last an hour. They might last 2 weeks. This could be it. So you need to be prepared for it. Understand how you're going to play it. You're going to try and trade everything, and the market is so volatile right now. We're seeing 2-3% moves intraday. You know what that does to individual stocks. A couple weeks ago, the one trade that I've called out this year that is a loser that I did a recap video on was Microsoft, and it was on this candlestick in here, and we were gapping up at that point in the market. If you remember where I've been throughout the past few of 4 to 6 weeks, is that I didn't think the market would draw down as much as it did. I was wrong, right? But my conviction was never high. My conviction was never high, and that's why I wasn't loading up. That's why I was being very patient. I was waiting. I was telling you, I'm not swinging. Like, I don't think we're going to go down there. But I'm not really just betting on it. I'm not going to be forcing it. You know, putting myself in a scenario where I could get hit. I wasn't doing that. And then we started to see a little bit of bull action coming off of this bottom in here, right? Coming off of this bottom in here, we started to see a little bit of bull action. And I was thinking, listen, we have a hammer in here, okay? The volume was pretty good. We're not too far away from all-time highs. This wasn't visible as of yet, right? We weren't too far from all-time highs. I had a thought process that the market was going to hold where we were in that rising channel that we had, and we would continue to go back up, and this would be another buy the dip scenario. And then we gapped up that day on Microsoft, and I thought it would run. It would start to run and run into earnings, and that was it. And we needed to participate. I sold that trade. I don't remember if it was 45 minutes into the day, 30 minutes, an hour. I can't remember exactly what it was. I could go in, but no sense in doing that. And we took, I think it was a 6% loss on those options. They were up 20% at one point. And they dropped 70%, right? And now they're getting saved. It was 330s for March. They're getting saved because it was a good vehicle to choose. It was March. It was buying yourself some time versus going into anything too short dated. And now earnings are helping save it. But at the time, because I didn't have extreme conviction in the market, and the market was showing me some more red flags, my risk management took over versus, hey, I've called this out and I believe this is a great trade for everybody, and now I got to fight it. I got to stick with it. I got to show everybody, no, I'm going to be right on this. No, here's what I'm going to do, because I'm a trader and I understand it's not about being right. It's about making money, taking good trades, having good risk management, understanding it's a marathon versus sprint. It's not about looking cool and posting, hey, look, I did this, I did this. This is what I called and regurgitated over and over all the time. It's not my style. It's use the risk management. That doesn't look like it's working out. Why? because the market started to drop that day, and the market showed us a significant red flag. So although I took the trade, I had to react to it right away. That's the same thing that's going to happen tomorrow. That's the same thing that's going to happen in the next couple of weeks. You're going to take trades. You're going to have some bias because what the price action the market is showing us is kind of telling us something. But are you so sure what happens when, hey, here we go. Rates need to be raised X amount. Here we go. Look at what the CPI numbers did. Well, look at what inflation is currently continuing trending. Here's what the supply chain is now telling us. Right? So you got to still take this very short term. And I don't mean zooming in and just playing 2-minute charts. I mean taking it day by day, setup by setup, new information that presents itself. If you're swinging this weekend and we get a gap up open tomorrow, we get a higher open tomorrow, good. That's an opportunity. Did you catch the bottom? You want to hold because it might be the bottom. So have your game plan for that. Okay, it might be a bottom. What's going to be your red flag that says, no, I should take these profits off? What's it going to be? We saw what happened the other day. Tesla, earnings, big reaction, after hours, bear and bull. And then when the bell rang on Tesla post earnings, boom, they dumped it down hard. It dropped all the way to 780 as of Friday. So that makes you aware that, okay, what's going to happen now with Apple? Okay, Apple got a good reaction on earnings. And then they opened up higher. What's the first thing that happened once they opened up higher? Boom, they shot it down. It was like, oh, here we go. Tesla, that same scenario. So you got to get protective. You have to react. And then later on that day, because the market saved that bottom, here we go. Apple ended up having a good day. So now it looks like Apple's going to go. Do you have that much conviction that Apple's going to go? That's the play. That's the one I like. That's the one where I think, okay, if big money is going to put their money anywhere, they put in Apple. It's the only safe haven in the world outside of freaking, real estate. There's no safe havens out there, right? Nothing. Apple is the best bet. So having conviction on something, having a good idea, you better be ready to react. Because if this Mr. Market decides, hey, listen, yeah, it looks like we're going to go. Thank you very much. We're going to break out in here. I talked to you about that video the other day, right? We break out and then we see a fake out and then everyone believes, oh no, it's a trap. And then we do this. That's a scenario that could happen, absolutely. Or I posted a funny meme right now on Instagram is that we break and it's like, oh, here we go. And it's like, oh no, you're killed. And everyone wants to go bear in here and then you're killed again, right? This is that environment. Each day, every single day, you need to take it with an open mind and an understanding of, I just got to participate in here and try and find some good trades. Try and find some good opportunities. There are more now clearly visible after we went through a week of sideways trading. Some have become visible and some have kind of given us a little bit of a roadmap of what we might be looking for in others. I'm going to share those examples with you. But look where they closed. Look where they closed us on Friday. Right in our resistance zone. They closed us right there perfectly. Enough to make you hesitate on should you be swinging. I did something I've never done before on Friday. When the bell rang, I sat at the charts for another hour and a half. I sat here trying to go over previous examples, things I've seen before, because in the event we're going to gap up on Monday, do I want to be in? Should I be in? Do I want to put some real skin in the game because I think we're going to gap up tomorrow? That's what my mindset was. And it still is. I do think we're going to see a higher open tomorrow. But guess what? I sat there and I was looking through charts. I was looking through individual names. And I reminded myself, I'm not that convicted. I don't have the conviction here. I don't. So who cares? Just let it go. Let it go. If it breaks up over here, right? If it breaks up over here, it's going to come back down, something along these lines. I'll find something intraday that I'll have a little bit more conviction on, that I can control intraday. But I sat here and I contemplated for an hour and a half. Should I just go grab some Apple right now? Should I grab Microsoft? Should I grab some Tesla? Should I grab NVIDIA, AMD, names that I like? Should I grab some Ford? And I'll show you the examples. Should I grab some Home Depot? Should I grab some Visa? And I sat there and I said, well, I don't have the conviction. So here's what's going to happen. I'm going to go in, and I'm not talking about putting a small percentage of my account in, because if I'm going to do that, then it's kind of like, who cares? Okay, it's a little bit up, it's a little bit down. I made a little bit of money making. Now, when we come out of this range, there should be some really big visible trades to come out of this range. So I want to be able to hit those with conviction versus, hey, I'm going to buy, let's just say I swung another 2,000 shares of SPXL like I did the other day, and I opened up down 10K. Well, I open up down 10K, then I'm going to be focused on managing the 10K versus, hey, having a clean slate, open mind, and see, okay, these are the setups I was looking at going into this weekend. Let me crush those setups. Let me hit those setups now. Let me go with them with conviction and use my size on them, because now I clearly see what's happening, and intraday I have some control. Futures markets have been extremely volatile, and that's what happens. The VIX is up, inflection points in the chart. So I'm going to quickly talk about them, but at the end of the day, guys, if you have some conviction right now and with whatever you're doing and things start to work out in your favor, it's going to enhance your bias to that conviction. Don't forget the risk management. Don't. Very important right now, because we could have that scenario I just talked about. Break, fake, and then do something like this, right? Maybe just got to trickle a little bit lower. Break, come back, retest. That's the FOMO. Right? Come up and it's like, oh man, I'm missing this. I'm missing the bottom. And then it comes back. You're like, oh man, I got screwed. And then it goes. That's going to be okay. I've created this bias. I haven't changed this chart for a week. This chart's been exactly the same for a week. Right? Must take out the zone. That's a support. That's a resistance. And it played out perfectly. That's using the technical analysis to my advantage. That's using something that gives me an edge, because I understood what should happen. Nobody was talking about this level. That was the level. I was telling you, from that day, that's where the pivot point happened. That's where the trend change happened. That's where the action happened on the Monday. That's the level you need to watch moving forward, not this level. Okay? So that was my bias, and it proved to be correct. Now in here, that zone needs to break. So I've created my bias of, if we take out this zone, we're going to be good. The bottom will be in, and we'll go make a new all-time high. When is going to be February, it's going to be March, it's going to take some time, whatever, but the bottom will be in. That's my bias. Ooh, I could get screwed being wrong there, right? And I start to get aggressive in here. I start seeing names that I really like the setups, and I start to get aggressive in there. Look where I'm being aggressive off of, when I should have been aggressive off of here. Well, I didn't have super conviction down here. I don't know if this is going to be a bear flag and it's going to drop down, and it's okay. I'm not trading. I've been trading full time since the end of 2017. Okay. I am not trading for this trade, this moment in the market. I'm trading to create wealth, to find great opportunities where I can make some money that I have high conviction in, provide for my family, and think about my retirement down the road. That's what I'm trading for. I'm not trading for, oh, I know I have support in here, I should go all in here and make a lot of money. No, I'm not an idiot. I'm not trying to gamble every opportunity that's out there. I want to trade when I know it's time. I can go for it. This is where I'm going to make my money. When is my time to make money? Always smacks me in the face. It's like, boom, here you go. This is where you can go make 3,000% on Tesla options, 6,000%. I had a great idea on Friday, talked about it morning live, and a lot of guys hit it, went up 400%. Tesla, lower open, flush it down, buy 820 weeklies. You're going to make a lot of money. Dailies, 0 DTE. Worked 100%. Guess what? I didn't do it. I just sat there and I watched, and I was glad other people did it. That's good, because it's not like I wasn't ready to go, aggressive. I knew that idea would work out. I mean, it should work out, and it did. But it's not like, hey, I'm coming in every day. I need to smash something right now. I'm not in. I don't need to smash anything right now. I could wait 2 weeks in February before I even care, if it's not presenting me something. I'm doing a lot of work right now in terms of like zooming in and providing those market threads that fit, because I want to help people that are going for it right now. They are like ready. They want to scalp trade. They want to grind. I get it. I'm with you. I'm going to do it for you. I'm going to help do it with you. But that's not my conviction time. That's not my big conviction. And that's the title of this video. Trade with conviction. Okay, don't worry about what this guy's doing, what that guy's saying, where we're going to go. Oh, this person was right last week, or they're going to be wrong next week. You can't do that. You got to be you. You got to trade with your conviction. You got to understand what you're looking at and how you could take advantage of the opportunities that are going to rise, but never forgetting to protect yourself. Listen, we close right in here. What am I going to say right now in this market? We could open up, gap up tomorrow, right? We can gap up tomorrow. Yeah, I can clearly see that. And when we talk about gap up, we're talking ES is going to just move right from here. And then, SPY is going to look like a gap, individual names, or they're going to come back and they're going to retest this level down in here. Would you be surprised at the wave? Of course not. I'm looking at this daily chart in here and I'm saying, if I'm just going to trade off of that one candlestick, then that's why I sat here for an hour and a half on Friday. At the end of the day, I'm looking at the candlestick. I'm looking at the weekly candlestick. I like this for higher prices this week. This week, if you are patient, you should make money. You should just make money. If you're swinging, you get the higher open this week, boom, you've already made money. But is this the bottom? Is this the complete bottom? I am not sure. And we are going to see. We are going to get a little bit more information. It might take to February 10 OPEX. It might take to the CPI numbers. It might take to the job participation numbers. We're going to see how this market's going to react. But right now, day by day, trade by trade, small time frame, there's going to be opportunity in here. You see what this market is doing right now, right? It's got the big leg down in here. Now the question is this going to do a bear flag in here and then drop down, right? Is that what's going to happen? But I'm looking at this and saying, listen, if we can break our Monday high, right? From there, you're going to get a very good signal. What does the buying pressure look like, or the selling pressure? Anytime in the market when you have a break or you have a test of a level, you could clearly see what the market is telling you. When we came down right in here and we broke out, what happened? We immediately saw a bearish engulfing candlestick. When we broke through these levels, what did we get? We got a bearish engulfing candlestick. That's not what you want to see when we come out of this zone. You don't want to see big reversal candlesticks. You want to see continuation strength candlesticks. So what happened is we came back up and we had another chance. There's always another chance. The market always gives you a couple of chances to really recognize what's happening. And when enough people recognize what's happening and enough algos start to respond to what's happening, the moves happen. So we came up, we tried to break it again. The market told you at this point, it's a lower high, can't get through, right? We can't get through this candlestick. And then they start to sell it off. We will see something very similar to that this week. When we break through these zones, what does the price action look like? Does it look strong, squeeze, covering, big action coming in, everyone's FOMOing in and things are running hot? Or are we seeing candles being sold into? If they are sold into, caution, extreme caution. And potentially, now we should go and do the load up on the short play. Yes, it's very late to do a short. Absolutely, it's very late to do a short. Why? Because the NASDAQ's already down 18%. Maybe even more. I can't even remember what it is now. So here we go. And it is down, 18%. So now you want to go short? Now you want to think about taking a short play? Well, for a trade, yes, there's going to be a trade off of this. If we reject the golden pocket, guess what? You can make money. You could go into QQQ puts and hit 60, 70, 100%. Do it with some size because it's a rejection zone, and there's your trade. February, you made some good money. But if you're gonna go in and you're just gonna, hey, I'm just gonna sprinkle a couple dollars in here. Okay, so then now you're just trading, right? You're trading day to day, every day. You're just trying to make a little bit of money. That's very different. But yeah, we could hit in here and then come back down, and guess what? You get a move of the market dropping 6% to revisit its zone. That's a big trade. It does not need to go lower, but you can still find a big trade. So we're going to be very diligently looking at those levels. What happens when we get into these zones? I was very impressed that the NASDAQ decided to close up over this zone at the end of the day on Friday. I thought once we started to move in here, that this is what I talked about. Watch, they're going to close this right in here. They actually closed this up over it, so that was good. That was a good sign. I like that. ES didn't though. ES closed right in it. So long story short, guys, if you're so focused on the bottom being in and, do I have to load up or whatever, you're going to put yourself in a psychological deficit, okay? Because you're setting yourself up for that, that big risk, okay? If you're not including that risk management. If you're going all in and you're playing 3x leverage all in options, you're putting yourself at a lot of risk. So be prepared to react to it. I hope the conviction plays out. If you have conviction, either direction, right? If you're bear or you're bull. This is talking about bull coming off of the bottom, right? Bears are potentially still high conviction that this is a bear flag and we're going to drop down further. I get a lot of those notes sent to me. That's fine, man. Like, you think I care? I don't care. If it drops down further, great. There's going to be more opportunities that can come out of it. I just have to protect myself and see if I can participate and get that entry signal to participate in that downside in February. Because I don't want to sit on my hands forever, especially if I can see it. I'm going to be ready for it. So there's a couple of signals in here of individual names that are going to lead the way, that do look like they have opportunity for upside. Just going back to what are the short-term signals we are seeing, right? To get the bull move without the major conviction. So this Apple earnings reaction, right? That's one hell of a signal. Obviously, volume is going to be big. That's one hell of a signal that, well, wait a second, what are we talking about? Why are things so bad in the market? Apple is 7% from an all-time high. Apple could go do an all-time high this week. So guess what? If the market's looking good and everything's saying, okay, Rick, you know what? Go for it. Guess what I'm playing? Apple, top of the list. 100%. I'll be all over it. I know how it trades. I'm very comfortable with Apple. I like the earnings reaction. We gapped fill, and then the market ran, and it closed at the high day. A lot of names are closing at the high day because of the way the market closed at the end of the day, right? That's the thing, right? Big bear trends Friday. Maybe they want to cover before the end of the weekend because of maybe some news on the weekend. So there's a little bit of covering, whatever. We'll see what happens this week. But that's the top of the list. Hey, listen, Apple just came back and back tested this zone. That's looking fine. I like the volume. Now, I will look for a pattern. I'll look for something that says, okay, everything's good to go. Now, maybe I would say, well, let me be safe because maybe I'm going to get a wedge in here, right? So do I need to get in and swing? That was the thing I was thinking last week on the Friday when I was sitting here. I said, well, that kind of looks like a wedge too. So why don't I just chill? I'll find another entry. I'll find an opportunity. Microsoft. Well, let's look at this Microsoft weekly candle. That's looking extremely bullish off of the bottom. That's giving me a little bit of, hey, if I'm going to be playing anything this week, guess where I want to focus my energy? Microsoft and Apple. They look extremely strong. I like that candlestick. Yes, it's earnings. It's a big reaction off of earnings, volume, bullish reversal hammer, engulfing body. Oh, that's A+ for continuation play. So guess where I'm going to be focusing on this week? That's right. Microsoft, Apple, those names. Okay? Those names is where I'm going to be focusing my energy. Top plays. Now, let's go look at Tesla. Very, very high conviction zone that you would get a bounce in here, right? Still golden pocket. It's a back test of this range. Okay, we got a trend line in here. Earnings, fake out reaction on earnings that they dropped it down. They just wanted to get to the GP. What I tell you, whenever a chart is near its golden pocket, what does it do? It gravitates towards it. Why did they flush it on Friday down into that zone? Why? What's the purpose? Because that's where the buyers are. That's where the algos are. That's where the sellers would meet the demand, and boom, you would get a reversal. Here we are. So what am I looking at? Can this be the bottom in a big run? If the market just hit a bottom, guys, gals, Tesla is going to go make a new all-time high. Is it going to do it this week? Absolutely not. This week's going to be an inside bar. There's no chance that this is not going to be an inside bar unless the market explodes or implodes, right? It's a huge range. In a huge range, you could have a very nice trade. So Tesla will give opportunity this week. That's 15% to its high. So a 5% trade on Tesla common shares or through options, which is going to end up being like 100% due to the way the IVs are right now, that's a good trade. Tesla's a great opportunity. Look at what Visa did. These are names that are showing me that the potential that the bottom could be in. Now, can we see the fall through? Look at that weekly candlestick, bullish engulfing candlestick, earnings. Look at the reaction on earnings. If I get so concerned that we're going to go into a very long bear market, we should not be seeing gap and goes on earnings from big giants. We should not. We should be them being sold into very heavily. We didn't see that. Instead, we're seeing big buys and continuation. Now, okay, we're going to come up into here. So is this going to go to a new all-time high? That's where we flush, or we're going to have to consolidate in here in bull flag and then go. That's where the conviction plays will start to shape up. Because if you tell me I could make a guess in here if he's going to go make an all-time high and I got to get in right now, or you could tell me that it's going to do this. Right? It's going to pause in here. It's going to, come up a little bit, and then it's going to hang out in here for a week or two, and then on that break, you tell me, would I rather buy now under this risk, not sure, didn't know they're going to do this on earnings, or wait a bit, wait till this pattern develops, and then when I see the breakout, I could play. Well, I'll tell you, I'd rather wait for that. That's the play. Let's go look at HD. HD and Google are two examples of things that I'm seeing that could lead to other names giving us good opportunities to play this week. Now, for one thing, HD got a bullish engulfing candlestick off of the bottom, off of the golden pocket. So all the technicals are still well in play. They're still holding up very nicely. Inside bar, fake out, breakout, inside bar, hammer, we closed over the daily lower high. So we've got a small trend change in here. So now, where are we going to go? Maybe we'll do an inverse head and shoulders later on, but this is telling me a name has already reversed its short-term trend. It's up over the daily ADMA. It's got a nice zone that it bounced off of, and it's got a trend change. Now, there's a gap to fill at 371. There's a gap to fill at 386. If the market did put its bottom, a name like HD is already telling us this is a good opportunity to make some money this week going into next week. Who also did this? Google did this as well. Big candlestick off of the bottom. We trade within it. Couldn't get a breakout. Inside bar, boom, we got the trend change. We got up over the daily ADMA. So can we get up into this zone, 28.20? Well, listen, Apple just delivered on their earnings, got a good reaction. Microsoft is getting that reversal out of the zone. Who's got earnings coming up this week? Google. That could be, boom, gap and go scenario. Google, top watch. Disney is also reversing that trend, getting out over here. Not up over the daily ADMA, but good, because it's got a lot of room to run still. You'd have to watch the reaction at 140, but these are the names. These are the top names that I'm looking at that are already showing that strength that are going to give you some opportunity to make money. They will make money as long as the market doesn't fake everybody out. If the market trends nicely, these names are already showing us that's where the strength is. Those are the easy plays right now. Who is ready to do what we just saw in Disney, Google, HD? It's Amazon. Look, they haven't broke, but they've got that candlestick and they've got the reversal, but they haven't broke. So if that breaks, we look for opportunity. As long as we see that the market is acting nicely, those names that I just talked about are showing us the continuation. They're leading the price action that we want to see in names that haven't done it yet. Amazon, NVDA, still holding that zone, hasn't got the break. Nike, holding that zone, hasn't got the break. Shopify, holding that zone, hasn't got the break. Those are all the plays to hit if we see the market's acting nice. It's looking good because we've already seen examples of these patterns working on the other names. Now these ones are going to catch up. They're acting as a laggard play. Ford, okay, it's got more room to run coming off of the zone. Netflix, holding, it doesn't have those big candles. It's still dealing with more of a mess, but look at the opportunity for a gap fill. AMD, different. AMD, Airbnb, MU, different. They're not doing what those names did, but that could be a laggard play, right? Look at that double bottom. Now, AMD is a great example. If we are going into a further drop, this name is going to drop further. We've seen how many names in the market have shown us. Hey, names that have run exponentially, where are they trading now? They've come back way lower. So to say that, oh, AMD, because it's oversold, this is a great buy, we got support here. If the market rolls over, AMD is going to get crushed. So be prepared for that. AMD, market rolls over. This name's already showing us more weakness than everybody else. So that's a good name to be jumping on puts, to be looking at, hey, further downside is going to come on this name because it's already showing us that weakness. More weakness is going to come in the weaker names. Airbnb, why? Why am I excited for this potential opportunity? Because of the support. The hammer, it's a little bit like those names, not perfectly. It'll have opportunity. Maybe they just need to come down into the demand. MU came down into the GP and pushed, not the same setup, but it pushed a little bit lower, but Maybe you just need to hit that GP and it's ready to go. So those names, I'd be a little bit interested to see what they're doing, but I like the other ones because they're showing us some strength. If this is going to be the true bottom, and here comes the big bounce, and everything that's absolutely decimated. ARC last week, if that's not a bottom, if that's not the signal of a bottom, then this market is truly going to go into a bear market. And I mean the stock market. Because this is it, man. The ARC in the Corona crash dropped 46%. From our top here to this first leg down, and you can use that, but whatever. That dropped 40%. What if we dropped here? 50%. 46% drop, big run. 40% drop, this is a big run in here, guys. This is a big run. Like, you look at that and you say, well, that's not really much in terms of overall chart. At that time, you wouldn't have said that. That was 36% at that time. Guess what happens if ARC runs 36%? What the individual names do? They double that. Big opportunity. This thing's dropped 51%. Look at what we're looking at here on the weekly chart. That, my friends, ladies and gentlemen, is the definition of a volume climax. That is the definition. But it's a weekly chart, so it could take some time to play out. If that breaks, man, it's ugly market. Ugly market. If that breaks now, ugly market. Look at the volume. Volume escalating. Increasing bear volume on this drop in here. And then a doji with a huge, we closed green, so it's green, right? That could have easily been red, but they made sure it closed green. That's what they wanted to do. And then what I just talked about of HD and Google and everybody, that candlestick being defended, that opportunity to go for a breakout. So any of these names, AFRM already showed you 17%. This has opportunity, but it's an oversold. These are the harder ones to do because of the strength is already drawn down so much. Trying to catch that major reverse off of the bottom. It's got a hell of a signal in here, right? Just need that break in the market to participate. Hood, drop down on earnings. Everyone says it's going to zero. Look at the candlestick it printed. Look at the volume. Bullish engulfing candlestick. These are names. SE. Look at the weekly candlestick on SE. Volume. Is that a climax at the bottom? Right? Looking at the daily in here. Big volume in here came and then a bullish, actually it's a piercing pattern candlestick. This name has huge amount of opportunity to run. So if you're looking at names that are due for massive runs and you're FOMOing because, the market's up 1% this week and maybe Apple, is opening up 2-3%, you got so much FOMO. If the market bottom is in, Hood, SE, Zoom, Etsy, Coin, PayPal, Roblox, Palantir, Net, I don't need to go into all of them, Square, Lucid, you will make a lot of money. Let the market tell you it's time, and it's time to trade with conviction. You're not missing anything. You don't need to catch the perfect bottom. You need to be all in at the bottom. If you try to do all in at the bottom on Coin, on Etsy, on PayPal, on Roblox, on Palantir, guess what? You're damaged and you don't have any more money to do it. This could be the signal. Let the market show it to us. I hope you enjoyed the video. Peace out, everybody.